Do we trade on CPI days? Now, CPI is Consumer Price Index that picks up how the inflation is in America. And when the price is high and the actual is higher than the expectation, it means that inflation is going up, the prices are going up. People will start to put more money into the banks because they are unable to spend the money and consume the money. The GDP drops. So what happens to the economy? Bang, per collapse. This happens on the second or third Thursday of the month. And as you know how to go to the trading economic calendar, right? You go to timonamati.com, scroll down to Trading View, and here is the economic calendar. I have designed for it to show the most important countries, so US, EU, Japan, South Africa, Great Britain, okay? And I have done it according to importance. So if you unclick this, then you will see the events that are not that important, that is just extra information. Maybe you want to just read something up, okay? So you can see the core CPI came up, and you can see that it was higher. So the forecast was 3.7, the actual was 3.8. The actual was 3.5, the forecast was 3.4. So inflation is going up and Americans are complaining. And what happens? South Africa and all the smaller indices follow. Okay, the American markets lead. So the question then arises, do we trade on CPI day? So I took all the Thursdays from the year, last year, and I got to tell you that this is not enough data to make a definitive analysis. Okay, but I can say that I'm happy to call a CPI day a medium probability day, which means that you can either take it or not take it, but we are going to put it into the medium probability trades portfolio. And we are going to see over time with 100, 200 data points, and then we'll get an idea of, is it a medium probability day or is it a low probability day? Okay. CPI day, you can see there are Thursdays. It's the second or third Thursday of the month. You can check them up if you want. The time entry, was it a win or a loss? So we can see over here that there were 6 winners, there were 5 losers. It was a 55% win rate, 45% losing rate, and 11 trades. So the profit was 5,041 and the loss was 2,540. So the profit was 2,500. Excluding costs. Now, remember the cost we are saying is there's a 50-point spread and we are risking 0.5%. So if we risked a little bit higher, then this price would obviously be higher. Including costs, you would have made a profit of 4,973 Rand and 3,800 would have been losses. So you would have had a 1.17% return if you took every CPI trade. Are you happy with that 1.17% for taking 11 trades? You know, if you enjoy trading and you love doing it, go for it. But until then, we're going to call it medium probability days on CPI.